Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. We're so glad that you tuned in today on this Tuesday morning. I'm your host, Shana, and thanks for being here. Financial Issues is a ministry that helps to educate people about financial issues from a biblical worldview. So we are a ministry. Our goals are to defund darkness and to fund the light. We do that with biblically responsible investing and encouragement and teaching of stewardship, encouraging you to be a joyful, generous, and obedient giver. So we want to welcome, we hope we have at least about 50 new listeners as we start this new year. During the month of December, our partners were very faithful and they considered the gift of financial issues to be a very important gift. And they gave that gift to their loved ones in the form of a gifted partnership. So we want to welcome all of those new partners. And so at the beginning of the year, it's always good to kind of reflect on where we've been and to take stock of where we need to go and do a little bit of back to basics, talking about biblically responsible investing and the importance of that. So we're going to incorporate lots of that into the show going forward here. So today on the show, we're going to talk about, I guess, an old topic, one that just won't go away, and that's inflation. We're going to talk about some of the stickiest non-transitory parts of inflation. We're going to get to the stewardship verse of the day. And of course, our phone lines are open. So if you have questions about financial issues that are on your mind, give us a call. 610-363-1110 is the phone number. I think we'll throw that up there on the screen if you're watching along too. And so you can call in today. Questions can range from anything. The very basics. What is biblically responsible investing? Why is it important? How do we do it? Why do we do it? All of those kind of things. Or questions about investing. Which type of account should you use? How should you be efficient when you consider taxes and things like that? So 610-363-1110. If you're too shy to call, or maybe you're not close to a way that you can do that, a phone or something like that, you can also follow along on social media. You can post comments or questions in the chat at financialissues.org and in the comments on social media like Facebook, YouTube, Rumble. We're also on Instagram, X, and
Truth
Social.
Yeah, there you go.
Okay, there was at least one more. All right, so let's start with a little chart. We've got a little chart to put up on the screen there. And the chart that we're going to be looking at are rents. This has to do with the cost of housing. So Apartment List is an organization, and they put out a report on Friday about the month of December and new leases. And what they said was that the cost of new leases increased 0.6%. 6%. They dropped 0.6% month over month, which typically does tend to happen this time of year. But what was interesting was that the year-over-year decline was also 0.6%. So rents, the cost of housing, has been one of the most sticky parts and non-transitory parts of inflation. And that's what you hear the Fed talking about for quite a long time now. Apartment List said, quote, in 2024 that it saw the most new apartment completions since the mid-1980s, with nearly 800,000 units still in the construction pipeline. And the supply boom, they say, has runway to continue well into 2025. So more capacity is good. One of the drivers of housing prices over the last couple of years has been lack of supply on the market. So lack of, you have more people looking for homes or looking to rent homes than you have supply on the market, and more demand than supply tends to push prices higher. So more capacity is good. More supply with the same demand would lead to lower prices. But when you have had demand growing by the influx of illegals that we've had in the country, 10 to 20 million or maybe even more. Who knows the real number, right? But who need a place to stay. Not all of them get put up in fancy hotel rooms. Of course, some of them have, but you have more demand than you've had increasing supply. You get higher rent prices. And we've seen those stories, all over some mainstream news, but social media. We've seen these reports of how all of the houses in certain neighborhoods and certain areas get this influx of illegal immigrants. And, the landlords would rather rent to 5 families that are willing to pay top dollar because they have it coming from the government than a family that would traditionally move in. Now, seasonally, overall new rents should rebound in the spring, as they typically do, but we will see what happens with the immigration and deportation strategy of the Trump administration. Renewal rates, on the other hand, from publicly traded REITs seem to be rising faster, or seem to be rising at about 2 to 3% instead of that 0.6% drop, which is one reason that you will notice that we have a more robust list of REITs, or real estate investment trust, on our buy list than we have had in a while. So if you're a partner, I'm sure you've already noticed that. If you're not a partner, it's easy to become one. Just go to financialissues.org, and then you can pay the $132 for a year to get full access to our partner program. But debt continues to be the elephant in the room. And at least for now, the issue is front and center, although it has not been. Our government has just been pretending that we can just spend as much money as we want and it won't matter at all. So we've got $10 trillion of maturing U.S. debt coming due this year, with about $6 trillion of it being short-term bills and $4 trillion being long-term notes. Now, the debt will not renew at near free money rates that we've seen during the last 10 to 15 years. We've pretty much been in an environment of free money, and the government has printed it like it was going out of style. So since we won't be able to pay off the debt that's coming due, even if we used every last tax dollar that we brought in and every dollar coming from tariffs, whatever that might be, we will likely, the U.S. taxpayers will likely have to refinance the debt that's coming due. And we'll have to refinance it at higher interest rates because the printing of that money has caused inflation. So in response to inflation, the Fed has raised interest rates, which means that the cost of continuing to keep that debt, plus adding more debt that the Biden administration has heaped on, will result in more printing and potentially more inflation. So do you see the vicious cycle that we're in with government spending and inflation? So all government spending costs taxpayers money, either in the form of direct taxes or by inflation. The maturing notes that won't be paid off will likely refinance at about 200 basis points above the current maturing rate. That means that our interest rate is going to be around 2% higher than it was. So on $4 trillion of long-term debt getting refinanced, $80 billion of interest expense is what comes with that. So that's why we are about at the place where we're spending more money to service our debt than on just about anything else. On top of that, we've got $2 trillion of extra debt that the U.S. government needs to sell just in order to finance the gross spending of the Biden administration. As a result, the U.S. Treasury just this week is going to be issuing almost $120 billion of new debt. So corporate America will have some of the same challenges as well. Corporate America has financed itself with the cheap to free money that's been available by decades-long low interest rates, and they will have some of the same challenges. So if they don't, perhaps what's going to happen is the buybacks will stop or slow down, and they'll find that it's more profitable to pay down some of the debt. So phone lines are open. 610-363-1110 is the phone number. If you get your call queued up right now, you will be the very first caller in the queue. 610-363-1110. We hope that you're going to stick with us. We've got a good bit more to go in the show. We've got more to talk about. We'll get to some of your questions and more talk about financial issues. Don't go anywhere. I'm your host, Shana Burt. We'll be back right after this break.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
God is doing something new, and we can see it in the lives of kids across America. The gospel is going into schools, and we need your help. We are trusting God to raise $200,000 of new funding. This funding will allow us to have 5 additional focus regions, as well as a team member who will oversee all of our regions. Please join us for this Drive for 5 in 2025.
To help spread the love of Jesus to children across the country, go to crossroadskidsclub.com/5 in 2025.
Hi, this is Shana Burt, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org, and click on the Preborn logo. Save a baby, save a life. Welcome back to Financial Issues, and welcome to 2 new CSN radio stations. So CSN is a network that we broadcast on daily, and CSN has added 2 new radio stations to their family. So welcome to the people listening in Lanai City, Hawaii, and Washington, Indiana. Thanks for tuning in today. We hope that you find value in our program. We hope that you learned something new today and that you get interested and you keep coming back and listening. So we're so glad to have you. Speaking of, and a welcome to the new partners who were gifted partnerships in the month of December. We hope that you're getting started, getting logged in and looking around on the website, watching some videos, and getting ready to start your biblically responsible investment strategy. Speaking of the partners, an alert did go out yesterday. So we have we've issued a sell alert, not for biblically responsible reasons, just a little bit of strategy there. I'll let you read the note if you are a partner, but it is in regard to the some of the preferreds that have been on our list in the past and are currently on our list now. So a little bit of a strategy to get you started off the new year in the right way.
Yeah, it's awesome, Shana. Thank you for that. And yes, welcome to our new audience. It's fun to see some growth, so
yeah, absolutely.
Pretty cool to get to have new CSN friends and new partners as well. Hey, Shana, I had a follow-up question from that last segment there. I really appreciated your info. Where might you expect inflation to go this year, especially now that Trump was officially certified yesterday? So if there was any question that he would be president in 2025, that was put to rest yesterday. God willing,
January
obviously.
6th.
That's right. January 6th of all days.
Rewrites in history.
How funny was that to see Nancy Pelosi basically giving her own death? Excuse me, not Nancy Pelosi. Kamala Harris it was like she was administering her own funeral. Pretty ironic. And so now that Trump was officially certified, where might we expect inflation to go this year?
Well, I guess anybody's guess is as good as mine.
Yeah.
The Fed issues their guess and their summary of economic projections. Doesn't look like there's going to be much progress if you consider the Fed. But, all in all, it's going to depend on how a lot of things play out. But inflation doesn't stand a real chance of slowing down and getting under control until the government stops spending and printing money that we don't have. Finance, the whole economic picture can become very complex. I mean, there's a lot of smart people that you can listen to out there to talk about economics and the markets and things like that. But, there's some very simple concepts that just at the end of the day, really make a big impact, and that's one of them. So I am hopeful to see that President Trump has created this DOGE, Department of Government Efficiency, and that is a priority of the incoming administration. I just hope that Congress got the memo that the U.S. population dropped in the ballot box in November, and that is that we want them to get a grip on out-of-control spending and, run our government in an efficient way and get rid of a lot of the waste. I mean, it's absolutely sickening to hear some of the things that the government spends taxpayer dollars on.
Yeah, absolutely. So until that happens, Shana, and hopefully it does happen sooner, what are some ways that we can use this inflationary time actually to our benefit as long-term investors? Is it one of those where you just kind of sit and wait it out, or are there some strategic moves? You'd mentioned the move that we're making yesterday with that alert. Are there some moves that we can make in our investments to actually help us improve during this time?
Yeah, well, in times of high inflation, I hope that you're not sitting out of the markets because, equity investing is really the antidote to inflation. So when prices go up, corporations are the beneficiary of those higher prices. That tends to increase their revenue. And as long as they can keep their expenses in check and so on and so forth, you have equity investing as an antidote to some of the high inflation. But, some of the money that has been flowing into the markets that the government has printed has made its way into the stock markets and is pushing equity prices higher. So, that's why we've seen, caution after caution. Valuations are getting higher. PEs are getting higher. We have to have a pullback, but we still have all of this money in the system that is really needs to find a home, and the home that they're looking for is in the equity markets. So I found an interesting graph that shows, money supply and the S&P 500. And what we've seen post-COVID is that the money supply has increased dramatically. So, it started with Trump, there was the COVID relief that went out, households got checks, businesses were able to get some free money, to borrow some money at a really cheap rate. So you had this huge influx of money into the economy because it was a response to, a catastrophe that we didn't know exactly how it was going to play out. And then you have, the Biden administration coming in behind that and one-upping President Trump, getting more COVID stimulus out there, and then continuing to push legislation like the IRA, the CHIPS Act, and all of this just government spending that they think that the job of government is to create jobs and to run an economy. You're even seeing that in some of his social media posts that that the Biden administration is pointing out, still trying to keep the Biden administration relevant at this point. But so you have more money chasing fewer stocks. We've seen a tremendous amount of stock buybacks, taking shares of stock off of the market, companies buying back their own stocks, and just the IPO markets being pretty much non-existent almost for the past several years. So that's led to these higher valuations because you just have all of this money chasing fewer stocks, or even if it was the same amount of stocks, you've got a huge amount of money. So the money that is being printed has been finding its way into the stock market. And Trump has traditionally liked cheap money. So as long as the money supply is increasing, so will inflation, and potentially so will the stock market. Now, we did write a little bit more about this topic. I do want to get to the stewardship verse of the day and some other things. So if you're a partner, make sure you log in and read that weekly commentary. And the commentary from last week is still up as well. We're going to leave that up for a little bit because it's sort of a review of last year and sort of a vision of where we're hoping to go this year as a ministry. So if you're a partner, make sure that you log in. Usually if you do it every Tuesday morning, you should be pretty safe to get it up. It typically goes up pretty late on Monday. Monday's a busy day for our analytical team and getting everything processed and out to the partners. So check that out. Our stewardship verse today comes from Hebrews 3:4. For every house is built by someone, but he who built all things is God. So Jesus is the centerpiece of everything, the centerpiece of history, the centerpiece of, hopefully, of our lives as believers. And Jesus was faithful in everything that God gave him to do. Now, the builder is more valuable than the building any day, because a building can't design itself, it can't build itself, it can't repair itself. The building represents or conveys the glory of the builder. Now, Moses did a good job in the work that he was given by God, but it was all servant work. So getting things ready, he was getting things ready for the things that were to come. So we can model our lives in the same fashion as Moses operated. Let's let God build the house and direct the work of our lives. And may we just follow the blueprint to the exact dimensions of every mark that's on it, and let the glory of God be made known when people look at the house that God built. What do you think?
That's well said, Shana. Yeah, really good. Yeah, God is indeed the builder of all things. I find it fascinating. You know, I think sometimes we tend to use language that might not be as accurate as perhaps we would like it to be. And one of them is talking about humans as creators. The truth is, we don't actually create anything. We take what God has created and we make it into perhaps something different, or maybe you could use the term, maybe we remake it. But it's just a reminder that God is the only one who actually creates stuff out of nothing. And that's really good because he's God and that's his job. Our job is not to divinely make things out of nothing. It's just to be faithful with what he has already created. And that's actually a far easier job. God has the hard job. We have the easy job. We just got to be faithful and honor him. So I hope that we'll do that today.
That's stewardship in a nutshell, right?
Yeah, absolutely. Absolutely. It really is.
Letting God be the architect and the blueprint and build the house, and just using the resources to do the work that he set before us. So
absolutely.
We hope that you're encouraged in doing that.
Yeah.
Well, let's take a quick look at the markets. So on Monday, the major indices soared thanks to a strong day for the tech sector, particularly chip-making companies. And I think everyone was sort of excited to hear what Jensen Huang, the CEO of NVIDIA, was going to say at a tech conference. And I think the tech stocks got a boost ahead of that. So yesterday, the Dow was a little below the flat line. It was down 0.06%. The S&P 500 was up a little bit over 0.5% yesterday. And the NASDAQ, the tech-heavy NASDAQ, was the big winner. It was up 1.24% yesterday. This morning, the pre-markets seem to like what Jensen Huang said yesterday evening, and they are indicated to be opening in positive territory. So the S&P 500 looks to open about 1/3 of a point higher. So does the Dow. And the NASDAQ looks to open about 1/5 of a point higher. And all of this, I guess, NVIDIA is the big winner after hearing Jensen Huang speak last night. So the S&P 2024 ended up being another year that was far above average. If you consider the long-term average around 13% for the S&P 500, the S&P was up 23% in 2024, following a 24% gain in 2023. So that makes almost a 55% return, cumulative return, over the last 2 years for the markets, the S&P 500. During the last decade, there have only been 2 negative years for the S&P 500. Now, those stats produce pretty decent odds, but we must remember that past performance is no guarantee of future results. For the majority of the time that the markets have climbed, there has always been this constant wall of worry. And I guess we'll have to talk a little bit more about that when we get back. If you're listening on an outlet that only carries the short version of the show, we wish you a farewell and hope that you'll catch the full show on podcast or our phone app. For the rest of you, stick around. We'll be back with more financial issues.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Kids all across the nation are facing challenges such as isolation and loneliness and bullying, but there's still hope and the love of Jesus, and we want to bring that to those kids.
Today, Crossroads has 6 focus regions across the country. We are committed to adding 5 more regional coordinators, reaching more kids than ever before. But we can't do it without you.
God is doing something new, and we can see it in the lives of kids across America. Children are finding hope and belonging and community and purpose in the love of Jesus. The gospel is going into schools, and we need your help. We are trusting God to raise $200,000 of new funding. This funding will allow us to have 5 additional focus regions, as well as a team member who will oversee all of our regions. Please join us for this Drive for 5 in 2025. Let's place 5 new team members in cities around the nation and watch what God will do.
To help spread the love of Jesus to children across the country, go to crossroadskidsclub.com/5 in 2025.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for hanging around with us. I wanted to finish up some of my thoughts about the market from right before the end of that last segment there. So the rally in the S&P 500, 23% last year, 24% the year before, cumulative, more than 50% in the S&P 500 just over the last 2 years. That's a lot. Yeah. And it sort of reminds me, it's sort of reminiscent of, the late 90s when we saw just all of those back-to-back years of, huge growth. And then, of course, we had 3 negative years in a row, which is sort of an anomaly as well. So not to say that that's what's going to happen again, but, just to kind of caution from letting our expectations get too high. And to take a little bit of a deeper dive into the last couple of years, it has sort of been, 24%, 23%. Those are some big years, but when we really get into what made up those returns, it was pretty narrow. So I'm sure by now you've heard of the Magnificent Seven. Those are the 7 stocks in the S&P 500 that have been the real gainers. So in 2023, those 7 stocks represented about 25% of the S&P 500, but they were responsible for about 2/3 of the 24% gain. Wow. Now, the other 493 companies in the S&P 500 only contributed about 6 to 8 points of return to that 24% gain. And those gains came from sectors like healthcare, energy, and industrials. In 2024, the story was very similar, but to a little bit lesser degree. The Magnificent Seven stocks represented 33% of the S&P by market cap and contributed 13 to 15 points of that 23% gain. So, the stock experts have really been calling for a broadening out of returns, meaning that more of the companies that make up the S&P 500 are going to start contributing either more to the overall return number, or those Magnificent Seven are going to take a little bit of a breather and cool off, maybe even pull back a little bit. Well, we've got some callers who are patiently waiting in the call queue, and I don't want to make them wait any longer. So let's get over to Bob. Bob's calling from Ohio. Hi, Bob. You're live on Financial Issues.
Hello, Shana. Happy New Year.
Happy New Year to you.
So my first question is, I saw the sell alerts for the financial preferreds. And the same company, it looks like FP30 and FP31 are involved. Am I correct?
I believe so. I don't have the list in front of me, but I think I know which ones you're talking about.
Okay.
Go ahead.
I have a financial REIT.
You still with us, Bob?
Hey, Bob, why don't we put you on hold here, brother? I think, Shana, we got a little bit of a connection issue with Bob. Why don't we jump over to John while we're waiting for Bob?
Let's do
connection.
It.
Yep.
Hey, John, you're live on Financial Issues.
Hey, Shana. I got a question. We have a BDA account, and I transferred in kind a stock to our individual account. I did that Friday, but they haven't done the dollar amount. I thought the dollar amount would change, but I think you had said something about that. Can you tell me if the dollar amount changes at the price that we actually bought it at, or does it go up, or what?
Yeah, so what happens, and let me just explain some terminology here so we can get everybody else on the same page with us. A BDA is an inherited IRA account. And so when you inherit an IRA account from someone else, I'm assuming it was a non-spouse that you inherited from. You have, as long as they passed after 2020, you've got 10 years to move the money out of that inherited account, pay the taxes on it, and then do whatever you want with it. So one way of getting money out of an inherited IRA account is you can actually move shares of stock. So in this case, John's talking about moving shares of a certain stock from his inherited IRA into his taxable investment account. Did I get that right, John?
Correct.
Okay.
Yeah.
All right. So what happens is on the day that transaction actually takes place, it is your brokerage will value those shares. And so that amount will be reported on your 1099, the amount of the transaction, the shares that come out on the day that they come out. And then your cost basis will start from there for you. So prior to you inheriting the money, it belonged to somebody else with a different cost basis. Your cost basis was maybe different on the day that you inherited it. But for tax purposes, what's going to happen is it's going to be valued at whatever the stock price was on the day that it was moved out. And so you should see that cost basis reflected in your brokerage account.
Okay, they haven't done that yet. I guess they can't figure it out I don't know if the calculators are older or what they're doing it manually, but they haven't done that. And I haven't looked today, but they didn't do it yesterday or Friday. But anyways.
Are you saying that the shares haven't actually moved, or they just don't show a value yet?
The shares moved. They just don't know the cost, whatever the cost is going to be of the new shares. And I couldn't remember, you had said something about that before. I probably should have just sold it and done it, but I wanted to keep it, thinking I'd keep it at the same cost basis, but that's okay. It is what it is, right? The tax man's got to get their fair share somehow.
That's right. That's right.
Unfortunately, yes, John. That's right.
Yeah. So your cost basis is just going to be the value that it was on the day that it moves out. So you don't retain the original owner's cost basis. You don't even retain your own cost basis for tax purposes when it moves out.
Right. All right. Thank you. Y'all have a blessed New Year. Thank you very much.
Great. Thanks, John.
Thanks, John.
All right. So did we lose Bob?
I think we lost Bob. Bob, if you're out there listening, man, call back.
Yeah.
You had us on the edge of our seats there with what you were going to say.
Right. So I'm trying to guess what he might have asked, but I don't have a clue. So 610-363-1110 is the phone number. The call queue is wide open right now. So if you have a question, 610-363-1110. Also on the chat and social media, we can pick up questions from there. Now, we don't have time to actually get to a question right this moment because we're going to have the Ag Report coming up here very shortly with Craig Haugaard. He's going to tell us what's happening in the ag and commodity markets. After we hear from Craig, we are going to take a short break, and then we'll be back with more financial issues. So if you want to be the first caller when we come back, somebody's taking us up on it. 610-363-1110. So.
And Shana, I do know we have many listeners been praying for Craig. I got to talk to Craig on the phone last week. He's been healing up a lot better. So his surgeries are now all past him, and I think he's now just in the nice place of being able to recover and not having any more looming surgeries. So thank you all for your prayers.
Yes, and do continue to pray for his healing. I got a message from him. I don't know if it was late Saturday night. I believe he had to make a trip to the emergency room.
Yeah.
So, but he's okay. Everything's good. He witnessed a little miracle. So,
amen.
All right. Well, here comes Craig. We're going to hear from Craig and take a short break, and then we'll be back.
This is Craig Haugaard with your Financial Issues Ag Update for January 7th. Corn futures got off to a great start this week as they rallied to the highest levels since last June. The rally was driven by a combination of weather concerns in South America, a weaker U.S. dollar, and traders front-running the fund buying that is due to hit the market beginning on Wednesday. March corn was 7 cents higher for the session at $4.57 3/4. Soybeans benefited from the same factors which supported corn, along with the domestic situation in which soybean crush inventories are getting tighter due to winter storms, which have slowed truck traffic significantly. At the closing bell, March beans were 6 cents higher at $9.97 3/4. Wheat futures bounced after punching through to new contract lows on Friday. U.S. cash values are now within $6 to $8 per metric ton of Russia. This is the most competitive that the U.S. has been in all of the current marketing year. That competitiveness was reflected in the weekly export inspections, which came in well above the top end of trade expectations. As a result, Minneapolis March wheat was 14.5 cents higher at $5.92 1/4. Kansas City was 14 1/4 cents better, closing at $5.53 1/4, and we had Chicago up 11 1/4 cents at $5.40 1/2. Cotton futures benefited from a weaker U.S. dollar and also moved higher for the session. We had March futures up 102 points when the closing bell rang, settling at 68.68. Livestock futures were mixed. February live cattle were $1.15 higher at $195.20 per hundredweight. March feeder cattle were $1.37 1/2 higher at $265.55 per hundred, and we saw February lean hog futures decrease by $1.12 1/2, ending the day at $79.65 per hundredweight. Class 3 milk futures closed higher for the third consecutive session. At the closing bell, January futures were 19 points higher at $20.64. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
The American people are taking a stand against woke policies.
People have had enough. They are watching what's going on and saying, I don't support this. They're making the only argument that's convincing to corporations when they start talking with their wallets. And the corporations are starting to wake up.
Tractor Supply is backing down.
John Deere announced is phasing out.
Harley Davidson is making a
Lowe's
U-turn.
joins the ever-growing list of companies ditching DEI.
Money talks. So why not have it represent your values? Learn more at financialissues.org.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org. That is preborn.org or financialissues.org and click on the Preborn banner.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
To learn more about Crossroads Kids Club and how you can get involved, visit reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. I'm your host, Shana Burt, and Bob found us again. So we're going to go right back to Bob. Bob's calling from Ohio. Hi, Bob. You're live on Financial Issues.
Hello, I'm back.
Good.
You made it back, Bob. Good to see you, buddy.
So, thanks. Yeah, the two, like I said, FP31 and FP30 were on that portion of the sell list for the preferreds. That same company represented, I believe, has a financial REIT that I own, but I don't know. I don't see it anywhere on the site or in the buy list or even on the broad list to see what that what that REIT would be.
I think it's probably. Well, it's not one that we follow. So I don't have, right off the cuff, I don't have an opinion on it because to my knowledge, it's never been on our buy list. So it's not something that we would have ever recommended.
I must have accidentally bought it.
Yeah.
I must have accidentally bought it, yeah. Because I don't want to buy anything that's not. I accidentally bought it, obviously, somehow. So
Yeah. What I would say about, is it in a taxable account or tax-free or tax-deferred?
It isn't a taxable. It's in a taxable account.
Are you up or down in it?
I'm flatlined in it for the most part.
Okay. So what I would say is it's not one that we cover. If it's one that you want to, there's probably not much wrong with it. I mean, it is biblically responsible. We like the company enough to buy its preferred stock. So it's probably okay, but it's not one that we're going to continue following into the future. So if something does change with it, there would be no alert to come your way. So, what you could do, and I'm kind of looking, the yield is about 4%. If you compare that to some of the REITs that we do have on our buy list right now, I think we have some better REITs on the buy list. So maybe you want to just consider, especially since you're at the flat line, just swapping that out with one that's on the buy list.
That's great. Terrific. That's what I was looking for.
Okay.
And then one other brief question I had. The Timothy Fund dividends, should I have those as well going back into my money market account, or should I have them reinvesting back into the Timothy funds?
I think those are okay for mutual funds and ETFs. I think it's fine to have those continue to reinvest, with the exception on the ETFs with just the mutual funds. Yeah, just the mutual funds I would have reinvest. The rest of it I would not.
ETFs not, but mutual funds yes. Okay.
Yeah. Mm-hmm.
Okay, great. Thank you.
Yeah. All right. Thanks for calling, Bob.
Thanks,
Glad
Bob.
we got you back.
Thanks for sticking with us, man.
Hey, Happy New Year. Have a blessed. Yep.
You too.
You too, buddy. Yeah, it's good stuff, Shana. Hey, Shana, I had a question for you, jumping back to what you were talking about in segment 3 with the Magnificent Seven stocks, if that's all right.
Okay.
So you had mentioned how, the Magnificent Seven has kind of really been the ones driving the market. And it just got me thinking, what do we make of that? Like, is that something that is good, to see the results of capitalism and the free market? You're seeing these companies kind of take the lead. It's almost like a to the victor go the spoils thing. Or is it something that we should be concerned about, seeing so much power concentrated in these 7 specific stocks? So I'd love to hear your thoughts, on that.
So I think the return is concentrated in those 7 stocks, but I don't necessarily think it comes with any power. And so, the market is just a way that we have used to kind of get an idea, to take the temperature of the markets. So the S&P 500 is made up of 500. It's supposed to be U.S. domiciled stocks that are the largest of the ones that are traded in the United States. It's not supposed to include any REITs or international stocks or things like that, but they've kind of broken some of their own rules. So it's not necessarily a pure S&P. But the reason that we have it is to have a benchmark, to be able to look at what's happening in general and say, okay, in general, the markets or all of the individual companies that make up the markets are doing well or they're not doing well, so on and so forth. So it's just a way for us to observe what's happening overall. And the point of me kind of pointing out that the Magnificent Seven was responsible for a large part of the returns over the last couple of years is just to say that it's really not representative of the entire of all stocks, right? So the benchmark is supposed to give us an idea of the way that companies are moving in general, but to say if the market's up 24%, that means all companies and all 500 companies are up 24%. No, it does. It obviously doesn't mean that. Yeah. And so since the Magnificent Seven were up, over 100% in several of the cases, it just is really the S&P over the last 2 years being up 55% is really representative of mostly those 7 stocks rather than the broad markets in general.
Yeah, it's very helpful, Shana. Thank you. I love getting to hear that wisdom, and I appreciate my somewhat simpleton questions that I ask there. That's good.
Well, Seth, if you have the questions, I bet 100 other people listening have the same questions.
Definitely.
Glad you asked.
Yeah, for sure. And speaking of questions, Shana, we do have quite a few Ask Shana questions that we can close our show out with if you'd like. Let's start with David here. He's 58 years old. He's saying, I correctly have my account with Schwab, which I follow the FISM models, and I have an employee plan as well. I also have an HSA, and there is the investment option there, and within the investment is a self-managed, this is from a Vanguard mutual fund. There's also the option to open and use the Schwab HSBA, and it gives the ability to select from stocks and ETFs as well. Do you have an opinion about using this Schwab HSBA? And again, David's 58.
Yeah, so the main difference here that I'm seeing is that in one account, you're sort of limited to Vanguard's mutual funds. And in another, in the Schwab account, then it would be more self-directed where you can kind of pick and choose which individual companies you want. So I would much prefer the option that allows the stock investing. That way, you can screen out the companies that are not biblically responsible, because if you're stuck just using the Vanguard mutual funds, Vanguard doesn't have a screening process for biblically responsible investing, and you will by default end up owning companies that are using shareholder dollars to promote an agenda that does not line up with your Christian values. So much better to go with the option that allows you to pick and choose which stocks you invest in, and that you can screen out the ones that don't fit.
Yeah, very good there. Mark up next here. Mark is 60 years old. He's saying, I'm trying to invest in companies that are part of the AI movement. Most of these companies that are on the buy list seem to be in the technology sector. What about companies that are developing small modular reactors to produce nuclear power? Is this an area we should be looking at to invest for the future along with AI? And if so, might they be listed in the utilities sector? What do you think for Mark?
Well, gosh, Mark, you stole all my thunder. You asked a question and answered it all at the same time. So, yes, there are other industries as well. And yes, utilities is one of them. And you don't have far to look. If you go over to the utilities buy list, you're going to see some companies who are benefiting greatly from the AI movement, because, the AI movement is said to that it will double the need for energy over the next 10 years or so. And so the beneficiaries of doubling energy production are the companies that sell energy. So yes, we've got several on the list, and there's actually one that is still on the buy list that has been a stellar producer for the partners that bought it, producing returns that rival NVIDIA. So
nice.
So good stuff there.
Yeah, that's awesome. All right, Shana, Eric has a great question here. He says, I'm trying to find a way to get some help for my daughter to invest some money she's had saved and put up a good couple $1,000 probably for our family too. Knowing it's hard to find places that aren't investing in the wrong thing, I was wondering what would be a good place, what it might look like, or a financial institute that could help us do that. Thanks so much. Have a blessed day. What advice would you have for Eric, Shana?
Yeah, well, what I would say is if you're just getting started, you probably don't have a huge need at this point to hire an expensive financial advisor, unless you just absolutely don't have the time to do it. This is a great opportunity that you have before you to learn how to do biblically responsible investing. So what I would suggest is become a partner of Financial Issues. You can get in there and you can watch some videos. There's 2 different strategies that you can choose. One is a hands-on way where you can build your own portfolio using the stocks that we give you in different sectors. We even give you asset allocation models and a portfolio tracker tool that you can use to get your portfolio going. If you want a less hands-on approach, we also have a fund and ETF model that you can get started with. And, that could be a great place to learn, just to start with one of the funds or one of the ETFs, because you're going to have instant diversification there. And then as you learn, you can start to build and add. And as you add money into your portfolio, you can expand it that way. So great question. All right, folks, we're at the end of the program today. We hope that you are encouraged. We hope that you learned something, and we hope that you'll come back because, Lord willing, we're going to be here every day to remind you time's getting short, the Master is coming back, and there's going to be a test on how we handled the time, treasure, and talent that the Lord trusted us to manage, and we want to help you be found a good and faithful steward. I'm your host, Shana Burt. Check us out at financialissues.org and come back tomorrow for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.